Professor Siegel, I really want to know whether it's guidance, earnings revisions, direction of gas prices. What's that most important signal that you're going to be watching for in the second half of the year to determine whether we're heading into a serious recession or not?
Well, John, I think we're in a recession. I mean, the data this morning was very bad. I mean, not on the inflation front, but on real spending. And the indicators that I look at, the forecasters now say second quarter will also print a negative GDP growth number. As you know, minus 1.6% in the first quarter. Now, it is a technical definition. It isn't followed by the National Bureau exactly. 2 consecutive quarters of declining real GDP generally signal a recession. We don't know whether they're going to
a serious monthly. That, Professor, is why I said a serious recession. What are you watching to see if it's like a really painful one or a longer lasting one versus just a technical one?
Well, I mean, it's a real one. Whether it's going to be shallow or deep, we'll yet to be seen. I mean, listen, we have to look at commodity prices. I mean, I'm not surprised the 10-year dropped below 3. I mean, that's telling you really big slowdown, because with inflation and the 10-year below 3, commodity prices falling everywhere. I don't think it's going to be a severe recession, John, but I think that we are in one of the most unique, unusual recessions with unemployment 3.6% and a strong labor market, yet demand and inflation is eating away at the purchasing power of the consumer.
Right, yeah. Working to move backwards more slowly, perhaps, for a lot of the population. Bob Dahl, what about it? Is this market pricing in what you think is realistically likely to happen in the second half, or is there still this idea out there priced in that earnings are going to be higher?
Earnings are the key is to answer that question, and I think most of us are now of the view that earnings aren't going to continue to go higher as they did the first 6 months of this year. The question is, how much lower do those estimates go? I'm with the professor. I think it's shallow. We don't have a playbook for this. I don't think the NBER will say we had a recession based on the technical first and second quarter. I think it's going to be more about bumbling along, as the market's likely to do, with a lot of choppiness and volatility. Inflation probably is coming off. Commodity prices, as we just talked about. So we're getting a little less inflation, a little less earnings. Maybe that means the focus in the second half is more on earnings and less on PE. That doesn't mean we go straight up, but I think it can be bouncier and frustrating both the bulls and the bears.
That would be nice, Bob. But how vulnerable is this market to an external shock, like an extended, China COVID lockdown that we got in the first half of the year that took a bunch of people for a loop? I mean, are we kind of like on tenuous ground that this is shallow and that we navigate well through it?
Yeah, tenuous is a good word. I mean, how long does the war last? What are the ramifications of it? COVID, you're absolutely right. Look, as the interviews that Sarah did at the bottom of the hour, Europe's facing a lot worse than we are here in the U.S. We'll manage our way through somehow. Don't forget, consumers still have $2 trillion of excess savings on their balance sheets. That will cushion the inflation problem a bit. And of course, we still have a pretty strong labor market, even though it's weakening somewhat. So I think we'll make our way through here a bit longer. I'm not saying no recession ever, but I think we can push it off a bit here.